Hello guys, good morning from here. So today I will be looking at US 500. It's 1:51 a.m. GMT Nigerian time. So the reason why I'm going to be looking at the US 500 and I will also be looking at the Nasdaq is due to the fact that this is what actually is the reason why we invest in the US stock. All right, so now whenever I'm looking at the US 500, I'm also consider it to be something that moves the New York Stock Exchange, which is the NYSE. And when I'm looking at the Nasdaq, it means that I'm focusing on stocks that are under the Nasdaq, because we have two major US stock market, which is the NYSE and the Nasdaq. So Nasdaq is electronic based and NYSE is stocks, businesses and stuff. So now starting from US 500, we can actually see that we've been bullish for some time. Now the first thing we have to do is going up to the monthly time frame. All right, so from the monthly time frame we've been bullish, and if I have to label my higher highs and higher lows, this is my higher high, this is my higher low, and if this happens to be our high, this is a swing, it is a strong swing high. And from the 3 months time frame, you can actually see it very clean and clear that this is a high, this is a low, and we are expecting a new high, right? So now if I take this off, you see that I have some labelings here. If I put back my drawings, you actually see I have my labelings here, which has my high, my low, and we're expecting a new high to be formed, and we're looking forward to see a new higher low. Now let's quickly run back to the monthly time frame. This is what we have. We're down to the weekly time frame, and you actually see the labeling that I have here. Now what is the idea that I'm having? The idea that I'm having is that I'm seeing a bearish move on the US 500. Now I say so, you can actually see that we've been bullish right here, right? So actually we have a bullish structure, high low, from a single price swing leg, looking from the weekly time frame. All right, the major low that we have is actually this low right here that I map out from my 6 months time frame. All right, so we tap an order block right here and we trade higher, and I will be referring to this right here as my breaker structure. Now if I go down to my daily time frame right here, you can actually see the price after breaking this high, price actually ranged, and what we have here is sell side liquidity pool, and we have the buy side liquidity pool, right? So after support was given to us, we impulsively trade higher, and when we trade higher, this is a break out of an area resistance, and then it returns to that area resistance, right? Then we trade high again. Now if you look at how this candlesticks has been trading, you can actually see that it is very weak. It doesn't have impulse, it doesn't have momentum, it is showing a sign of weakness. Then we finally came back down to that area of resistance that becomes support. It forms support again. Now it trade higher. This is where it now got interesting, where it trades higher to fill up an area of sell side inefficiency. So we filled up an area of sell side inefficiency, and if we were expected to go bullish, it would have broken this high. It was break this high, but it did not do that, but filled up an area of sell side inefficiency and trade lower to the area of support. Now if you look closely, you can actually see I had arrows on those areas, and those arrows identifies that we have a pool of liquidity resting at this price level, and that is an area we know has a significant support and resistance. All right, so having the significant support and resistance right there shows us that I will not be buying. If I were to buy, I will not be buying from an area of support. Now the idea behind this is that when we are buying from this area of support, there's liquidity pools resting below here. All right, so what we think the algorithm we have to do, it would like to take those orders, buy them, right, or let the retail traders get into the market and start buying, and then we finally sell at a premium. right? Now when it sells, where is it trying to go to? It's trying to be trying this area of liquidity, and what we actually have here is stops. We have this sell stop right here. So I want you to try to understand. I know I might be a bit fast, but you can take it slow, okay? So now we have an area of liquidity resting on this low. We know the price wants to go there, and the another nearest area of liquidity that we have is this sell side liquidity. We would like to see price get to that area to execute those orders, to collect those pending orders, and then we'll see if it breaks a demand zone right here. Now the question now is, do I see this as something that is valid? Now my answer is nope. Alright, even though I am seeing this as an order block, I will not be seeing it as something that would be valid. Now why so? The reason is because of this thing that occurred right here is actually something that is not convincing to me. So let me do this. We still have another area of SSL, so not a breaker structure. Let me put that as significant support and resistance. So these are my personal views. Not a financial advice to you. Alright. So we are having significant support resistance right here, and due to the fact that this did not move impulsively, I will not be seeing this as a valid order block. But let's identify that as an area of demand. We have an order block right here, because price will eventually get there, and we'll see if it will react from there. Alright. Now if you also look closely, you can actually see that we are having an ungodly range occurring right here, and this candle we have a sweep of previous week high, so the next draw to liquidity is the previous week low. Take the previous week low, be drawn to the nearest one, also be drawn to this liquidity where we're having significant support and resistance. Going back down to the daily time frame, you can actually see that right here. So we're just having series and series of liquidity given to us. And another reason why I will not be looking at this demand as something that we have my interest, because we have traded very far away, and when it traded very far away, it started to print this series of higher highs and higher low from the daily time frame, so did not trust that. Now we also did react from this bullish order block. Now if this if I mentioned reminded me of one comedy. Alright, so if this order block is to be valid, is long-term valid, you see the reaction it did from here, it would have traded higher to break this high. But what did it do instead? What it did instead is the price tapped trade into it, used this buy order to balance sell side inefficiency. So we are now having what I will label as a failed high right there. We have a failed high for the purpose that we tap into an order block but did not break a structure. Price came back again, traded higher, still showed a failure to go above the high, hunt previous week high, and we are trading lower to be drawn to an area where we have liquidity in which we have previous week low. Okay, then what else? Now this if I were to go bullish, you see this drawdown that are called right here, it would have, if it trade downwards slowly without impulse, and was also operating lower lows and lower high, then when it taps that bullish order block, if it did something like this, trade into an area of bearish order block, tries to sell but failed, and finally see a structural break, to the character and structural break, then I'll be buying US500. Not buying, I'm not trading US500, I'm using it in confluence to stock market that I have eyes on. So this right here is a sell stop. Now if I roll down to the 4-hour time frame, you can actually see right here there was no bearish trend printed that got violated. Alright, so this filled up sell side inefficiency. Trade back lower, try to go higher, but did not break our high, because this is our range high, this is our range low, no break, so it needs to be drawn to an area of sell stop, areas where we're having all of these liquidity pools. Right now, due to this, I'll be looking at stocks that is under NYSE, like BlackRock. You can actually see BlackRock, my favorite back then, also dropped. Alright, so from our weekly time frame, what we have right here is that price took away all-time high. After taking the all-time high, it came back to it and used it as support. So we are having significant support and resistance right here. So if US500 is dropping, then BlackRock is likely to do the same. Alright, so for BlackRock right here, I have this high, I have this low. Take this off, thank you. So I have this high, I have this low. Okay, let's start from here. I have this high, I have this low, higher high, higher low. This right here is a hunt, is a sweep. Now the reason why I say so is it did not impulsively break like the candle starts to range on this high. You can actually see this one did something very sweet right here, breaks like you will know this is a breaker structure, very clean, then it traces backwards to the demand, and this demand or the block did a sweep right here of liquidity buying. That means is buying sell stop, sell orders, trace higher, breaks this high, comes back to do what? Mitigate the order block. But this one did not do impulsive trade. The candles did not close very far away. This starts to range on top of this high, so this it's purging this high. So we might have a little tipsy bit of a drawdown right on the euro stock. So if I were to get some shares from BlackRock, I will not be buying it at this high. Okay, I will not be buying it at the high. We wait for it to drop down, and I would like to see what will happen at this area right here. Alright, so paying attention to there, we have the sweep, we have character change, or break a structure, and then we finally sweep this high. Then this is an inducement. Okay, so that's what we're paying attention, because BlackRock is still bullish, not yet bearish. So what we're gonna have is just a pullback. Alright, so when that pullback is happening, I will be avoiding the US stock. Alright, so we'll not be buying this month or whatever month it is. So we have 2 points of interest. This one will be my smart money trap. Alright, this is not the origin and it's not at the discount. My discount is actually right here. So if price reacts from this one, I don't mind. I only have my eyes right here. Alright, so this one, BlackRock is still bullish, so we are expecting a little bit of drawdown to wherever it wants to buy from. Alright, so that means that if I go back to US500, right, you say, like I said from the start, it's been bullish. Alright, it's been bullish, so we are just going to have some drawdowns. Alright, we're gonna have some drawdowns. So I don't know if it will like, because this big body candle you see right here is an order block, like is a demand for me from the 6 months. Alright, then the 12 months you actually see very big, how big it is. So when that drawdown happens, I'm patiently waiting. If we are expected to buy, then I'll wait for a confirmation. Alright, if it eventually gets there, I don't know what will happen that will make it get there till when that time comes. For now, we are just paying attention to the current situation that we are having, which is price going for this previous week low, the sell stop, and we see if it will violate this candle right here. Okay, so once that violation occurs, then we keep an eye to see how much further it might drop. But for now, this is just what we are paying attention to, areas that are close and nearer, because anything could happen. And what could possibly happen is it might hunt this low and then boom, continues going higher. Alright, so guys, that is it for US500, and pay attention to the stock market. So we have USE. Remember, we bought this last year and our target was $5. We finally hit the $5, and I'm just waiting for price to get back to this price level, because that is the current or recent demand that took out the high. So that is it, guys. See you guys later on. Take care, sleep tight, and be safe.